up sharply. Let's go to our caller we've got online. I believe we've got John in Philly. John, how are you? Is John there? Yes, hi, John.
Hi, Basil. Yes, thanks for taking the call, and thank you for going over the market overviews. I have a question for you regarding some of your patented technical indicators, please.
Yes. Fire away.
Specifically, Basil, you long ago taught your listeners, myself included, and use these routinely, the utility in price compared to a couple of moving averages, specifically the 9-period EMA, exponential moving average, as well as the 200-period EMA.
Yes.
Very specifically, I wanted to ask if you could pull up the E-mini futures, the ESU8 contract, pull that up on a 10-minute bar chart, which you do routinely.
Sure.
And ask
give
if
me
you
one
could
second.
print
I've got it right here. Yep.
See if we could look at that, which includes the 200 period EMA.
Right.
And maybe if you could do a full screenshot of that. And very specific question for you. What I wanted to know is, as you've used these analytical techniques over the years, have you found it as a good trading tool to, in downtrends, short or institute short sales on bounces that hit up into that 200 EMA on that 10-minute chart? And we can use the past 3 days as just an illustrative example about that overall question, please.
So what I'm going to do, John, you'll probably be able to see the charts, and I'm doing this right now. I'm making this 200-day, it's the blue line, and I'm making it nice and thick, and you're going to see something very interesting. And one of the things that I found using these moving averages is that it's possibly the best way to use it is to have complementary technical tools. But if you want to just blindly look at something that says, is this very good support or resistance? If you look at this, here we go. I'm just going to see when we go back to, I'm squeezing it as much as I can. There it goes. So I'm going back to the 29th, around about the 29th of August there. And you'll see that there was a yo-yo pattern way back on the 29th. It went above and then below, and then it broke above it, and it went beautifully. And then it hung around for a while right there. It had a quick peak A, B, C, D, E, and then another one went to alternate count G, and then all of a sudden it pulled back. And then that blue line became extreme resistance. Then it became fabulous support all the way until it broke down at 5:30 on the 4th. What did we do today? The 5th. So that's yesterday evening. And then we went below, and we have not come back to the blue line in the 10-minute. Now, let me just do one thing before we talk about it. I want to go to the 5-minute and show something even more fascinating. In the 5-minute, you can see it. To illustrate visually, I'm going to make this once again nice and thick. And look how beautiful everything about this blue line said. Strong resistance. I'm just going back to yesterday at about 2:45 in the afternoon. Couldn't break above it. Couldn't break above it. Tried this morning at 7 o'clock. Ran to a peak D and failed. Then it had 2 isolated bumps to the upside after the opening. Occasionally you can get an alternate count. That is what I call the rogue wave. And this is kind of a double rogue wave where it goes to an E and then an F, and it keeps failing at that 200-period moving average. All of a sudden now you're getting closer and closer, and it's saying that the Dow essentially is leading the market higher. The E-mini is rallying a little bit, but what's happened is from the low that was made around about 10:30 this morning, you're making higher lows and higher highs, and there's a real good chance that this is going to be a leg E, and we might test 28.90 as we're doing this hour with another half an hour to go. That's a line that is getting close to feeling like a magnet point. So it depends also on the time frame. Using the 5 together with the 10, you'll see that the 10 now is further away because it's a 10-minute chart and has a longer look-back period, and that doesn't work quite the same way because here you can see when I I've got these 5-minute and 10-minute of the futures, the E-mini futures, ESU18. You'll see that it's getting closer and closer to try to test. Now, if it gets repelled from that line, it makes that line even more important, especially the 5, because it means you're not even getting close for the 10-minute chart. If there is a leg C in the 10-minute chart above 2889.00, that's not only going to help the 5-minute, but it's going to help leg C in the 10-minute, and then the MACD and stochastic are rallying nicely. Then there should actually be a leg D to the upside. Am I covering kind of what you wanted to ask and talk about?
Thank you. You are.
So I use it. It's ironic that I have on the same chart a 200 period look back, exponential moving average, 200 period. I mean, that's 200 10-minute or 200 5-minute bars. That's a long time. And at the same time, I have a 9. I actually have a 9 and a 14. And what's really interesting about this is that the 200 period, you don't have to even, I treat it as if it was an important gap or a specific candle or a specific peak. You don't have to do anything. You just have to wait and be very patient. And as it gets closer, you say, okay, is it going to hit it or is it going to be repelled by that line? So that's the way I use it. It's not a major thing. It becomes a major thing the closer you get.
Well, that's all very helpful. Thanks so much. Have a good day.
Thank you very much.